Hey, welcome back to YT Finance, and today we are talking about NIO Stock, ticker symbol NIO. We're going to discuss how NIO Stock could rally from $18 all the way up to $52 per share and beyond. Then we're going to talk about the latest near-term catalysts for NIO Stock, which will actually cause the NIO Stock price to surge up. Then lastly, we're going to weigh between the risk and reward between investing into NIO Stock or not investing into NIO Stock to determine if NIO Stock is, one, a good buying opportunity right now, and two, if we should invest into this company from a risk to reward standpoint. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about NIO Stock, and without further ado, let's jump right into today's stories. So if you didn't know, NIO is an electric vehicle maker that is located over in China, and they sell luxury electric vehicles, and they are doing very well. The current stock price for the NIO stock is currently around $18 per share right now, which is a fantastic buying opportunity in my opinion, because as you can see over the last year, the NIO stock price has absolutely plummeted downward. However, if we look at the full chart, you can see that the stock has been downtrending as of late, but this just provides a fantastic buying opportunity compared to what the stock is actually worth, especially what analysts think that the company is currently worth. And this could be a fantastic buying opportunity for NIO stock. Now, I personally would want to buy this company probably below or around $16 per share, but $18 per share is not that bad either. Analysts currently have a low-end 12-month price prediction for NIO stock at around $20 per share. However, the average consensus and median price target for NIO stock among analysts currently sits at around $52 per share, and we're going to talk more about this in this video. And then lastly, we also have the most bullish positive price prediction for NIO stock over the next 12 months, which goes all the way up to around $87 per share, which is phenomenal. So even if you would decide to invest in a NIO stock right now at $18, in the next 12 months, you are most likely going to land in one of these three price targets among analysts, and all of these would give you fantastic upside potential. So like we mentioned, the NIO stock has been falling ever since the beginning of this year, and this is due to a multitude of macroeconomic factors as well as political factors, which we will get into during this video. However, the good news for NIO right now is that they recently announced that they're going to start trading on the Hong Kong Stock Exchange as early as next week. And this is going to mitigate some of the company's political risk in case they get delisted from the New York Stock Exchange, and this potential catalyst could cause the NIO stock price to rally very aggressively, which is going to be fantastic news for investors. But the good news right now is that they are going to do a secondary listing on the Hong Kong Stock Exchange as soon as March 10th. And unlike their other Chinese competitors, such as XPeng, ticker symbol XPEV, which is also another good company, as well as Li Auto, ticker symbol LI, who already have a primary listing on the Hong Kong Stock Exchange, NIO has actually completed a 2-year listing on the New York Stock Exchange, but due to the recent political environment, they want to do a secondary listing on the Hong Kong Stock Exchange, which should make investors very happy. A Bernstein analyst actually says that NIO's listing on the Hong Kong Stock Exchange creates a fantastic hedge against its potential delisting from the New York Stock Exchange. More good news is that this secondary listing will actually prevent NIO from raising capital through the issuing of new shares for at least the next 6 months. More good news is that NIO is seeking a listing on a third exchange, which is going to be the Singapore Stock Exchange, and this just lowers the overall risk of investing into this company. So not only does this lower the risk of NIO stock being completely delisted and investors losing money, but it's also going to open up NIO to more investors, such as investors in the Hong Kong market as well as the market over in Singapore, which is fantastic news, and this could cause the NIO stock price to absolutely skyrocket. However, there are other macroeconomic concerns regarding NIO stock and a plethora of other electric vehicle companies. This would include inflation, rising interest rates, supply chain shortages, Russia invading Ukraine, and a plethora of other macroeconomic headwinds that the companies are facing. Because other electric vehicle companies such as Rivian are going to actually increase their prices of their vehicles by a whole 20% to compensate for the various higher costs due to these macroeconomic factors. But as of right now, NIO has not done this. But what's something to look forward to is that NIO anticipates to have their earnings report around March 24th, and this is going to show us their growth prospects for the full year of 2020 as well as the most recent quarter. And this is going to be another fantastic catalyst that could lift the NIO stock price. So is NIO stock going to be able to double your money, triple your money, or even make you any gains within the next 12 months? Well, for this, let's take into consideration what Wall Street analysts are saying about NIO stock and why they are very bullish on this overall company. Right now, NIO is currently trading at a 64% discount since one of its peaks back in January of last year. And based on 13 analysts that are currently covering NIO stock, the average price target for the NIO stock is $52.59 according to this article, which would give us over a 140% upside opportunity if we would decide to invest into the company right now. But again, I personally would invest into NIO somewhere around the $16 mark personally. So let me tell you what some of these very prestigious analysts are saying about the company, and I'm going to go over bearish and bullish price targets so you all get a well-rounded view of what you can anticipate and project for NIO stock. So according to a CSLA analyst, they see NIO rising around 60% in 2022 with a price target of around $35. Likewise, a JP Morgan analyst has set a price target of around $30, which would imply an upside of around 37% in the coming months. However, unlike the previous two more bearish or neutral price targets, we have a very bullish price target that has fantastic positive news from a Citigroup analyst that actually believes NIO's entry into the Hong Kong and Singapore stock exchanges are going to cause the stock price to surge, and he says that this is going to be a fantastic short-term catalyst for the NIO stock, and his long-term price target for the stock is $87 per share, which is absolutely fantastic, especially if you could buy the stock at around $16 to $18, which is what the stock price is currently hovering at. And clearly the stock chart is showing us that we are getting a fantastic deal, especially considering what the stock price used to be trading at. So this is all around very good news for NIO stock. But now let's talk about some upcoming catalysts for the stock besides their earnings report, as well as them diversifying into a multitude of other stock market exchanges. So if you didn't know, NIO is actually beginning to explore their opportunities in launching more of a smartphone product that is designed for car users, specifically their car users. They are currently hiring professionals in the mobile phone field right now, which just fuels the expectations and the speculations regarding this new phone product. Now, as of right now, we don't have a lot of information regarding this, but hopefully in the next earnings report, or maybe even in the next event, we could get more information on this potential catalyst. The EV maker is also calling for their earnings report to bring in sales around $9.5 billion this year, which means that NIO stock could rise massively in the coming quarters based off of this very bullish projection, and I 100% agree with this. More good news in upcoming catalysts is that NIO is coming out and releasing new electric vehicles in China, such as their ET7, which is set to be launched in China soon, which is going to be a full-sized luxury sedan. Also, their ET5, which is a mid-sized sedan, is also going to be available on the market, and so far this car has had the highest pre-order volume in the entire company's history. So clearly this market absolutely loves NIO's vehicles as well as their overall technology. Now, I do want to talk about the risks of NIO stock because there definitely is plenty of risk here. For instance, if we remember looking back at the risk surrounding DD Global, ticker symbol DIDI, which has absolutely plummeted in its stock price, this was mainly due from how regulatory pressure over in China has affected Chinese companies that are listed on US stock exchanges. So for Chinese stocks in general, you wouldn't want to allocate more than 10% of a total portfolio in Chinese stocks because that would be bad risk management. And I'm not talking about a 10% allocation for one single Chinese company. I'm talking about how good risk management would say that your portfolio weight of all of your Chinese companies combined shouldn't make up more than 10% of your overall portfolio, mainly because of the current relations or lack thereof between the US and China, because lately the relationship has been quite poor, which is going to affect Chinese stocks. So these are risks that you need to consider before investing into a foreign Chinese company. However, overall, NIO as a company and their stock is set to do very well in the upcoming future. So now let's dictate whether this is a good investment based on a risk and reward analysis right here. So first I want to highlight that hedge funds are actually buying up more NIO stock. So clearly hedge funds think that the risk to reward ratio is very good for NIO stock right now, enough for them to buy. And according to TipRank's hedge fund trading activity tool, they say that hedge funds have added around 216,000 shares of NIO in the last quarter, at least for the hedge funds that TipRanks is tracking. It's also exciting to see how NIO is expanding more into the European market, and while they plan to at least launch 3 new vehicles in 2020, they are continuously expanding in up to 5 new countries over in Europe in the near future, which is fantastic news. And this is going to be very favorable for NIO investors. So much so that TipRanks actually says that NIO stock has strong potential upside as high as 164.5%. So clearly this is a good investment based on a plethora of factors from both analysts, them launching new phone technology, they're expanding into 5 new countries over in Europe, they are releasing 3 new vehicle models, and they are diversifying themselves in a multitude of stock exchanges. So all of this says that it's in our benefit to weigh these risks to reward, and right now the reward certainly outweighs the risk right now. But lastly, I do want to give a warning. If China ends up attacking Taiwan in the near future, we could see something happen to NIO stock very similarly what's happening to Russian stocks right now. Russia invaded Ukraine, and now all the Russian stocks are absolutely plummeting, and if China decides to do that to Taiwan, we could see a very similar thing happen. So the risk is very real. Now, if you want to trade this company, be my guest, but I just wanted to make you aware of that risk because to me that is the greatest risk of investing into Chinese stocks right now, at least. But I would love to hear your thoughts down below. Comment your NIO stock price target. Remember to smash that like button right now, subscribe if you are new, and I will see you in the next YT video.